Hey guys, it's Jamin Coker with Secure Financial Management. I want to get out a brief economic update and share some thoughts with you guys of things that we're looking at in the markets right now that are helping us make decisions on our investment strategies and our portfolio models as well. And the topic I want to focus on today is something called a PE ratio, or a price to earnings ratio. Now, you've probably heard about this before. We've talked about it a lot, obviously. In our sessions, we talk about that the PE ratio is one of the things that we look at in evaluating market conditions and our portfolio management as well. So a PE ratio, or a price to earnings ratio, is essentially a valuation tool. Okay, and there can be a PE ratio on individual stocks, right? There can also be a PE ratio on the market as a whole. And something interesting right now that's happening is up to 40%, or a little bit over even, I think 40% of companies that are reporting right now are not giving an earnings guidance number, okay? And that's vital to our PE ratio calculation, right? Without one form of the equation, we can't get a result. Let me give you a quick example of what a PE ratio would look like here, okay? So we've got a stock here, okay? We've got our stock that's valued, this is just a real simple example, right? We've got our stock here that's valued at $100, and the earnings that stock is gonna produce this year is $10, right? So 100 divided by 10 is the PE ratio. They're pretty simple, right? Now you might ask, well, is 10 a good PE ratio or a bad? The number is almost irrelevant at this point with our explanation, because there's so many factors that go into that, right? Is it a growth company? Is it an established company? Different things like that. So don't get wrapped up around whether the number is good or not. This is just a great example of what a PE ratio is, okay? Now, if we don't have earnings guidance, right? It's real hard to get a PE. You can't actually get a PE valuation. So it looks something like this, right? Hey, we've got our stock there. Now it's valued at $100, but there's no earnings. So what's that PE ratio? Good question, right? Now the PE ratio is supposed to be a forward, or one of the ways you can look at a PE ratio is a forward indication of value. And then you can start to make adjustments to that, whether that is a fair value for the market, or a fair value for that company, or if it's too expensive, or if it's cheap, or different things like that. But it is concerning at the moment that for over 40% of the market, of the S&P in particular, of the stocks that, or the companies that are reporting, are giving no guidance. So the situation is when it comes to their earnings call, and they're saying, hey, the future is so unsure with what's happening with the virus, we can't even really give an educated estimate of what we might have going forward. So that's one of the reasons we've started to get a little bit more conservative with our portfolios, is that we don't have the data, we don't have the guidance on a large part of the market as to what the potential future might hold, right? Now, second quarter earnings are going to be coming out slowly. The lion's share of them will actually report mid to late July, more so late July. It'll be very interesting to see what those companies report this time around, right? Is there going to be any earnings guidance? Or are we still dealing with the same thing of a lack of data, a lack of information? Guys, I hope that's helped. We'd like to get you out these educational videos, share what we're looking at for our portfolio management and views of the markets. Hope that helps you out. As always, none of this should be considered a recommendation. If you'd like to discuss your individual financial situation, please give us a call at the office, 210-428-6250. We'd love to speak with you.